Hey guys, welcome back. I'm excited to continue to share my journey to financial independence with you. I am here to give you the steps to get your pre-approval, start looking at homes, learn how to make offers, and get your home rented. So stick with me and I'll share all my realtor tips to be able to purchase your first investment property. So the first step that you're going to need to do in order to be able to buy a property to rent out is to save up for a down payment. If you're planning to live in the property and maybe you're planning to live in one unit and rent out the other unit or the other 2 units, you are going to need less of a down payment, possibly 3 to 5%. But if you are going to purchase it as an investment property, you're going to need 20 to 25% down. As an investment property, it's just a riskier move on the bank, so they want to have more of your money before they lend you the rest. So step number 1 is start saving your money, which is also step number 1 towards financial freedom, is saving. So just make sure out of every pocket you know where every dollar is going, and you have a set amount that is going to your rental property bucket. So now that you've saved up enough money for your down payment, step 2 is to reach out to a lender. A lender is going to require tax returns, pay stubs, and savings information, so any kind of amount of money that you have saved up in any account. And they're going to want to see all that information as well as pull your credit. So you need to make sure that your credit is in decent shape, especially if you're buying a rental property. You want to try to take advantage of as low rate as possible, and the lower your credit is, the higher your interest rate is going to be. You're more of a liability to the bank. So if you can get your credit above 720, that is the golden spot. That's where you're going to get the best rates, which will allow for the best cash flow. So definitely talk to a bank. The other good thing about talking to a lender is that they can help you tweak your credit score. So they'll look at your credit and they'll know if you pay off this much of your car and that much of this loan, your credit will come up 10 points. So they have the software to be able to tell you what to pay off and what not to pay off to keep your credit nice and high. So definitely talk to them first before you try to do anything with your credit. They can be a great free tool for you to use. Another tip I have for you is to make sure you talk to more than one lender. Ideally 3 or 4. They're all going to ask for the same information, so I always say put everything in one file folder, have it ready to be sent out to multiple people. And what that does is it lets you compare rates. Not everyone's going to offer you the same amount of money or the same interest rate. So you can shop around, and if one offers you something better than the other, but you like the first one best, you can go back and say, this lender's willing to do this for me. Can you beat that? The other good thing is that if you do it all within 1 month, it doesn't hurt your credit more than once. So shopping for a home is a hard inquiry on your credit, but if you're doing it all within 1 month, it does not hurt your credit multiple times. Once you have your deposit and you have your pre-approval in hand, you are ready to start looking at homes. Step number 3 is get a good realtor. I cannot stress this enough. A realtor is free to you. The seller pays for the realtor fees. You have nothing to lose by finding a really good realtor that answers the phone, gets back to you, and understands the market. It is very important to have very good people on your team when you're trying to make money out of real estate. So find a good realtor. You can do so by looking online, reading reviews, or reach out to me and I can help you find a really good realtor in your area. Step number 4, the best part of real estate is looking at homes. I find this to be the funnest part. I look at as many homes as I can whenever I'm looking to purchase a property. I also get to look at a lot of homes just by showing them to my clients. For you, it should be a fun experience. So just make sure that you narrow down a location that you want to be in. Rule number 1 of buying a home is location, location, location. Make sure that you purchase a home in a place that you know the future market, you know the current market, you know that there is a train station coming by that's going to bring in more traffic. You want to be able to have more knowledge of that neighborhood then the realtor, and then anyone else who lives in it. So you want to do some research, figure out where you want to be. Once you figure out kind of the location, you'll narrow down your search. As always, my suggestion is buy a home that needs work. I don't know if you've heard of the term BRRR. Buy, renovate, rent, refinance, repeat. And that is how a lot of people make money. You buy a home that needs some work. You can partner up with a good contractor. That obviously property number one would be a testing ground, and there'll be some mistakes made, but you only learn through those, and you learn what contractors you're gonna want to work with, or if there's work that you're willing to do yourself, that'll save you some money depending on how much time you have. So if you buy a property that's going to need some work, you're going to be able to automatically increase how much the home is worth. And so you buy a home, you fix it, get it ready to rent, and you rent it, and already increasing the value. It's just overall the best way to do it. If you did buy a property that was already done, you just want to make sure it cash flows. So with any investment property, the important part is cash flow. You want to make sure that your mortgage, insurance, vacancy, any expenses that go into holding this property are going to be less than what you can make for it in rent. A really good website that I recommend is rentometer.com. Obviously not sponsored, is my second video on YouTube, but they can, if you add an address there, it can give you an idea of what the average, the medium, the high, and the low rent is for that property, those amount of bedrooms and that location. So it gives you a good idea of what that would be. As well as online, you can find information on how much the insurance would be, your interest rate. You'll be able to calculate all of that on an online calculator. If you just Google mortgage calculator, there are some that have all the expenses, or those are the ones that I recommend. And then you want to keep track of having some money set aside in case you ever have some vacancies. So every month you want to put a little bit money aside for when you do have a vacancy. So now that you have narrowed down your search, found a property you're interested in, it comes time to put an offer in. So right now in 2021, it's hard to buy a home. It's not an easy task. That's why you want to have a really good down payment to make your offer sound really strong. You want to listen to your realtor. You want a realtor that's doing comps. They're looking at the comparable sales in the area, and they're going to be able to tell you if they think the house is underpriced, overpriced, or properly priced. Right now, most people are bidding way above asking price. The one good thing is you have an appraisal come in, and that can always balance back in your favor. Some of the things that I have seen being done in this market here in Rhode Island is some people are going to the home with an inspector before putting in an offer so that they can waive inspections. I don't recommend that to my clients. I think inspections are important. The good, lengthy 2-hour inspections that review everything, I think they're worth every penny. Usually they pay for themselves with just 1 or 2 repairs that you request from the seller. But if you feel confident in walking through and understanding what the property needs, so walking through with a contractor or an inspector and putting in an offer that doesn't require inspections or requires inspections just for informational purposes, which means you're not gonna go back and ask the seller to give you money for stuff. It's always a great add-on to an offer and makes it sound stronger. So I've also seen people be willing to pay a little bit above appraised value. So you want to calculate that with your numbers and your cash flow and all that. But if you think that you can pay an extra $3,000 over appraised value to a seller, that sounds like a really good deal. $3,000 to $5,000. It doesn't have to be much, but you're saying, hey, this is my offer, and in case it doesn't appraise, I am willing to pay $5,000 over appraised value. It sounds really good. It gets your offer accepted, and usually it doesn't come to that because appraisers are moving with the market, and most of the time homes are getting appraised properly. So now that you have inspected your home, you're getting ready to close, just wanted to make sure that you understand that there are closing fees. They vary very much per property and time of month that you're buying. They're going to include attorney fees, lender fees, anything that the town needs prepaid, any prepaid insurance. There are just many different factors that can go into closing costs, so you have to have a budget of about $5,000 to $10,000 towards closing costs. Once you close on the home, you want to renovate it or fix it up or whatever needed fixing prior to renting. And then when you are ready to rent, if you feel confident in renting it yourself, that's one way to do it. Or I also recommend hiring a realtor that does a lot of rentals in the area, because then your home can go on the multiple listing service, which gets it out to everyone, every single website. It just gives it more exposure. But if not, you can try Facebook Marketplace, Zillow, Trulia, Redfin, any of the websites that you can list rentals in. Once your home is listed, you're gonna get a lot of calls. So you have to be willing to put in the time to screen through tenants, which is why I kind of like the idea of hiring a realtor that can screen through all of that, unless you're gonna be paying a property manager. If you have someone that would be willing to manage the rental aspect of it, then it's a time saver, because it does take some time to screen through tenants, especially right now. There is so much need for rentals that there are going to be a lot of applications for any rental at any given time. My suggestion is to use the website rentapplication.net or something like it. I'll link in the description to this particular website. What I like about it is that you don't have to pay anything as a landlord. The tenant pays. So they go in, they apply, it runs their credit. You can do a criminal background check as well, and an eviction check. And so they pay for everything. The more you ask for them to check for, the more that the tenant will have to pay. But a regular credit check is about $30 for the tenant. Doesn't cost you anything. The application technically belongs to them. So as a realtor, if one of my clients doesn't get the home that they applied for, I'll just share the application with them and let them, take it somewhere else. But you want to be able to see that credit check. You want to look through to make sure that they are valid people. You want to make sure that they've paid their bills. And you want to call their previous landlords. You have to do your homework. Call the previous landlord to make sure, with tax records. This is all the stuff that I do for my landlords, is I check tax records to make sure that the landlord that this client is giving me is actually the owner of the home. And if they are, and they give me a good reference, it gives me a good idea that they would be good tenants. It's all about how much screening you do. Every amount of hours that you put into getting the good tenants in there, it's going to pay for itself, because having a bad tenant is a nightmare. I have had it. I've had a tenant from hell, and I ended up having to pay them to get out, because I just didn't want to deal with them anymore. So I learned my lesson, and I make sure I don't do that to any of my landlords. I make sure I vet people 100% before I even pass it on to them. But I had to learn the hard way with my own property. I feel like you make more mistakes on your own properties than you do when you're working for someone. And then once your house is rented and you have positive cash flow, then you just repeat the whole process again. Then you start saving up for another down payment, and then you start buying more homes. My husband and I's goal is to have 5 more properties in 10 years. That's going to help us with our goal of becoming financially independent. So hopefully you can start with us, and we can buy a property every other year, and we can be financially independent together. Thank you again for joining me. I hope that this was helpful. I ask you to like and subscribe so that I can continue to provide some good content for you. If you have any specific requests or anything that you'd like, feel free to leave a comment. I appreciate you joining me in this journey, and bye guys.